I'm with Keith Dickinson, Director of Veterinary Insurance Agency. So Keith, we've heard the government say that small businesses are still being lent money. What's your experience in the veterinary market?
Well, I don't think that's true. I think that loans to the veterinary profession are probably at the lowest level of penetration for many, many years. In 2007 we did about 120 loan applications from vets in the year. That figure reduced to half last year, and this year we've done 16 new inquiries, which tells you that the bank are just not lending money.
And do you feel that the veterinary profession is recession-proof, as people say?
Well, I have heard that statement, and it's been a pretty popular one for a number of years, but I really don't think that's true anymore. I have heard somebody say recently that flat is the new growth, and I think that most vets at the moment, most practices certainly, are making their money by cutting costs rather than being in a position where they're actually turning over any more money. So no, I don't think it's a recession-proof business any longer.
So what's your impression of the insurance rates in the veterinary market?
At the moment, I would say the rate situation is that they are at their nadir. They're the lowest rates I've seen for many, many years, and I think that's probably for three reasons. It's very competitive because there are a lot of people out there. Insurance companies are struggling. The second reason is that a veterinary profession has a very low moral hazard, which in insurance terms means that they don't fiddle, and a lot of the rest of the population do, which is why insurers are keen to do business in the veterinary world. And I think probably one of the other reasons is that as all other businesses in the UK have started to struggle, people have turned their attention to the veterinary world.
So what kind of insurances should a new vet take out as they set up their plate?
Well, there are fewer people setting up their plate these days than used to be the case, but for most of them, their insurance needs are exactly the same. Obviously, they need liability and surgery and property insurance, which the bank would always insist they have anyway when they obtain their loan. They need to protect themselves. We would strongly encourage them to have private medical insurance to get them back to work more quickly, and obviously professional indemnity for any negligence claims that might be made against them. There are a raft of other insurances, but I would say that those are certainly the priority things.
And finally, do you find a difference in dealing with small animal practices and the large animal practices? Very
good question. The answer to that is probably yes and no. There are a lot of similarities. Certainly the products that we sell, we don't differentiate whether they're to an equine vet or a small animal vet. But there are quite a lot of differences in the way they work. A good example would be, for example, a piece of portable equipment like an endoscope, which is obviously going to be taken out of the practice much more frequently by a large animal vet. So really the loss ratios, the claims experience of a small animal practice is by and large better. It's a generalisation, but equine and farm practices do tend to have practice managers because they are generally a little bit bigger, and dealing with those practice managers is both a sort of a blessing for people like us, and also makes it more difficult because there is actually a duplication of the work that we do. But we're happy to deal with all vets, large, small, equine, farm, the lot.